have your reflections done, and there's instructions on Brightspace how to do that.
What's going on, everyone? Emil Hilson here. Today we'll be reporting about Tattooed Chef earnings, another plant-based food company, and it's delayed earnings. Somehow we want to know the answers to it, but we'll find out why it's going on with Tattooed Chef, whether they'll be able to beat analyst expectations today, and the reasons for its delay. What happened to its last-minute earnings delay, and how would that really affect management trust in the future as well. Now, before that, let's take a look at the market today. General break even today for all the big markets plus the small cap. And look at something I want you guys to take a look at. Look at the EV space today. Rivian, Tesla, Lucid, all up 10+%. Okay, I mean, Tesla is 40%, but look at Rivian and Lucid. Is a market bubble coming? What's going on? Not sure, but we're here to focus on plant-based foods today, right? So let's talk about it. Oatly yesterday crashed 20%. Beyond Meat crashed about 10%, right? Now you see some type of buying pressure back up for this company. That's $6 billion valuation. Beyond Meat as well. How are they going to recover? They have some problems with supply chain in a way and all that. So we'll see. We'll see what's going on. So if you're here, give me a like and comment. Let me know what's going on and whether you're excited for these earnings. So yeah, let me know how you're feeling about this earnings report, whether you're a believer in plant-based foods, what's going on with your perspective in a company and all. All right. So let's see what they have for earnings in a way. Numbers should be decent. I think they're able to beat earnings expectations in a way. Hey, work Konami, how's it going? Will it come out today? Yes, it will, for sure. And are you currently an investor of it? Of Tattooed Chef? Personally, I am an investor. It's I guess, decent part of my portfolio. So my portfolio, let's see, in Tattooed Chef, 10%. Average cost about $17. So I'm down about 10%. Am I gonna buy more? It depends. It depends on how they do in the report. All right. If I see some optimistic news and all that stuff, definitely average down my position. It's a great way. You're excited for the numbers. Oh, awesome. Glad to hear you guys. So yeah, we should expect 63 million in earnings today. And I think they're able to reach expectations. I think that's fine in itself. Nothing really too mind blowing out of that. Are they gonna be analyst expectations? Probably. But yeah, we'll see. We'll see what they do. And besides Tattoo Chef, any of you invested in other companies as well? Like any of you invested in Oatly, Beyond Meat in a way? What's going on? Well, what are you invested in? The Very Good Food Company? What other plant-based foods companies are you guys in as well? That's what I'm curious about. All right, it's out. Thank you, thank you, thank you. Let's see. Let's read through it. And let's see what they have. Quarterly revenue of about $58.8 million. An increase of 44% year over year as well. And we also have branded revenue. Brand revenue about 56% to 35 million. All right, what does Sam Galati has to say? We are pleased with our third quarter results with record revenue driven by our Tattooed Chef branded products, said Sam. You know what? I think I want to do this on here so I can highlight it for you guys. So record revenue of 58.8 million. Highlight that for you guys. Branded revenue increased 56% to 35 million. We're pleased with our third quarter results with record driven by our Tattooed Chef brands. Okay, so that's normal. Tattooed Chef is now a top 10 brand, top 10 across club groceries channels in the category which we compete in. Okay, our branded products are now in over 13,000 stores nationwide as we have executed our plan to diversify our channel and customer mix. Okay. Looking ahead, we believe we are well positioned for our strategy entering 2022 and next year. Hello, Inga B. Welcome into the stream. I heard the numbers leaked already. Really? Numbers already leaked. Okay. Well, is this a surprise? But let's read through this, okay? We're thrilled with Tattooed Chef's acceptance at retail stores and believe our products resonate with the next generation of consumers. Right. Especially with young people, and also more millennials as well. Right? Well, I mean millennials and Gen Z. We're constantly looking for new ways to go into the market, and supported by a recently announced acquisition, plan to expand our product portfolio beyond freezer aisle, allowing consumers to enjoy the products on the go. Never been more excited about the future opportunities for growth. Revenue was about 58.8 million, which is a 43% compared to 41 million last year. The branded product revenue, 35 million compared to 22.6 last year. So that's a nice increase as well. Gross profit, it's about 10%. Okay, so nothing much different. Net loss was 8.2 million compared to 3.2 last year. Their adjusted EBITDA though was down to 5 million, negative 5 million compared to a positive last year. And this is their first 9-month outlook. Okay, but let's take a look at analyst expectation. What did they predict? 5 cents negative earnings. So I don't think they made it. I don't think they made it. 63.95 million average revenue. That's like missing by a little bit. 10%. Wow, that's not a good number in terms of analysts. But we'll see. What's the reason for a lower revenue? Revenue. Let's see. So that's Third quarter results. There we go. Yeah, okay, increased by this much compared to that. The revenue increase was driven primarily by $12.7 million in the branded products and $5 million increase in private label and legacy products for our selected private label retails. The increase in Tattooed Chef branded products resulted from expansion in the number of US distributions, as well as increased volume at existing retail customers with our current portfolio of product and new product introductions. All right. So they are expanding more into retail stores, distribution places, and that's what's causing the revenue increase, but not that as high growth as analysts were expecting. Now, is this a disappointing one? We'll see about that. The slight decrease in gross margin was due to increases in all this stuff, as well as the 2 facilities in New Mexico. Foods of New Mexico currently only manufactures private label products, which have a lower margin when compared to our Tattooed Chef branded products. Okay, right here. And this Foods of New Mexico facility is brand new and expected to become active during the first quarter of next year. So I expect that to start producing a lot more food in a way, okay, and helping out in their revenue. Now, you have to see, like, is inflation gonna really be a continued factor in this, right? Because the gross margin is still relatively low, and is this going to stay still for like the next year in a way? Miss analyst expectations, but I am a long-term investor. I am one as well, so you know, one quarter doesn't really mean a whole lot unless some big changes, right? Obviously, the operating expenses is going to increase, right, because of all these factors in a way. So, not too much surprising parts. Okay, they have a cash about 129 million, 130 million dollars. So they still have a lot of good cash. Revenue. So okay, so let's take a look at the rest of the year outlook. Revenue to be around 210 to 215 million. That's still an increase about 40% year over year. What does analysts expect? 240 million. Holy cow. That's massive right there. So that's like 10% off of analyst expectation, 10 to 15%. Gross margins around 12 to 14%. Okay, like to see that increase. Adjusted EBITDA of negative 18 to 20 million. The company is committed to an aggressive plan of growing its brand through extensive marketing and promotions that has already produced significant revenue growth in the grocery retail. The company has invested in staff as well, so that's why you expect to be a losing number for the upcoming of this year. All right, capital expenditures 15 20 million. Obviously, this is a growing company expanding, so you would expect negative in terms of EBITDA, net income, right? Because you are in a high growth phase, like they've said. Okay, there's earnings call around 1:30 today, so we can listen to that probably in the next 15 minutes. So here is the outlook. I mean, here's the layout of what exactly happened. Yeah, the cost of goods, it's pretty high compared to last year, but also the revenue has expanded. And so in total, gross profit is about the same. It's just their, you know, net income in a way, it's kind of down because they're expanding so much faster compared to last year, which is a expected part. So they lost about 10 cents in profit. That's double of what analysts has predicted. Okay, so I expect tomorrow, you know, depending on the earnings call, obviously you still gotta listen to it. Depending on the earnings call, I think you would expect this company to go down 10% tomorrow, just like the same fate as Beyond Meat and all that other company. I hope they provide an explanation for why they moved the earnings release date. I hope so too. Yeah, like what's the reason for that last minute? What exactly happened? You know, that kind of never happens with the companies that I've invested in. So, taking a look at the balance sheet, still really healthy in terms of assets and liabilities as well. No worries about that, honestly. Like, um, so not too worried about that. You have to take a look at their stock dilution in a way. Last year compared to this year, up about 2-3 times. So some share dilutions in there as well. And other than that, not too much really. Like this is the net income in a way. Obviously, it's down. They're expanding a lot. You know, shipping, supply issues. It's affecting a lot of companies. Affecting a lot. So, all right. Earnings call in about 15 minutes. I think I'll take a short break in 10-15 minutes, and then I'll be back. So whatever comments you have, leave it, and then we'll talk in the earnings call. How's that? Yeah. Not much for me to really say. Like, I know this company is gonna go down 10% tomorrow. How much you want to bet? And I would add in some. I think it'll be a good Okay, I think it'll be a good opportunity to add in some if you feel long term wise they are gonna make it to that 500 million in revenue. I think that's what they said by 2025, expecting 500 million in revenue. That's their goal, right? If you do feel it has that quality, buying it today is an amazing deal, right? If you don't, you could try short term trading this. I'm not good at it, so I won't give you recommendations on that. But I'm just giving you my honest opinion. And obviously, I gotta listen to the honest to the earnings call and see what they have to say about it. I think it's just most important that I listen in. You know, what kind of what kind of trends are they seeing in the market and all, and then buy some. Yeah. Okay. So I'll be back because we're gonna check out the earnings call in about 15 minutes. Okay. Ah, I'm back. Hello. Hey, I always have like computer issues. It's always disconnect. It's not good. Hey everyone, hi. I am back actually. I was just taking a break and then now we can actually listen into a live conference call. Don't forget, if you enjoy my content, hey Joshua, how's it going? Welcome in. We're just doing some finance coverage on a plant-based food company this time called Tattooed Chef, bruh. Tattooed Chef. They make plant-based food. You know, they're really known for their freezer foods, right? And they have a pretty cool logo. Look at this. Look at that. I like that. Isn't that cool? And so we're just doing a live conference call into that. Did you check out my video today on Resort Originals for my favorite YouTuber series? I love the work I'm putting in for that. I love that series. Hope you enjoyed it. And then we're gonna take a look at the conference call. Take a hearing. And so those of you that are still watching, thank you very much for checking it out. The video, still watching my content. Thank you very much. It means a whole lot to me. And I hope I can bring you more future content like this. So be sure to give me a like for the work I'm putting in. It really, really matters a lot to me. And I really appreciate it if you can do that. Thank you. Okay, we're listening to the last call. Oh my god. Okay. So they're just playing music right now, and so we'll just wait. So that revenue miss, am I a little bit disappointed? Sure. Maybe Wall Street analyst was too hyped up. Who knows? But it's still not a bad number. You know, compared to quarter over quarter, I believe last quarter they made about 50 million, right? Let me double check. So let's double check. Last quarter they made about 50 million. So it's like about 15% increase, not too bad quarter over quarter. That's nice. That's nice. And I guess Wall Street is very, very hyped up. They expected like 20 to 25% because it's a growth company, right? The food growth company. Okay, let's take a look at the earnings call and listen in. Okay, let me know if you guys can hear anything. Oh, wait.
5 p.m. Eastern Time today.
Okay,
If you've not
it's
had a
coming your
chance to
way,
review the
Lindsay.
release, it's available on the investors portion of our website at
Who
www.tattooedchef.com.
is doing
Before
status
we
of
begin,
women?
I'd like to remind
Who's
everyone
doing
that the
status of
prepared
women?
remarks contain forward-looking statements. Such statements involve a number of known and unknown uncertainties, many of which are outside the company's control and can cause future results, performance, or achievements to differ significantly from the results, performance, or achievements expressed or implied by such forward-looking statements. Important factors and risks that could cause or contribute to such differences are detailed in the company's filings with the Securities and Exchange Commission. Except as required by law, the company undertakes no obligation to update any forward-looking or other statements herein, whether as a result of new information, future events, or otherwise. In addition, within our earnings release and in today's prepared remarks, adjusted EBITDA is referenced. It is important to note that this is a non-GAAP financial measure that we believe is a useful metric that better reflects the performance of our business on an ongoing basis.
I'll mute myself now. So
A
whatever comments you guys want to
reconciliation of
write
this
it down.
non-GAAP financial measure to its most directly comparable GAAP financial measure is included in today's press release, which has also been posted on our website. And with that, it is my pleasure to turn the call over to Tattooed Chef's President and CEO, Sam Galletti.
Thank you, Rachel, and good afternoon. On today's call, I'll briefly review the key business highlights for the third quarter and discuss our recent announcement on the acquisition of Belmont Confections. Then Sarah will discuss our marketing and innovation, and Stephanie will provide further detail on the financials. Our third quarter results demonstrate strong momentum, with record quarterly revenue of $58.8 million, a 44% increase year over year. This growth was primarily driven by 56% growth of our Tattooed Chef branded products, with revenue of $35.3 million in the third quarter, representing 60% of our total revenue. At the end of last year, our branded products were in 4,300 stores, and we set a goal to more than double our distribution to 10,000 stores. I am proud to say that thanks to all the hard work the team has done, our products can now be found in over 13,000 stores, more than tripling our store count, while also diversifying our channel and customer mix. While we had national distribution before, we are now much broader and deeper with the addition of mass and grocery store. We are firing on all cylinders, broadening our sales mix, diversifying our sales channels, innovating our product portfolio, gaining market share, and have some of the highest velocities in frozen food. That being said, we are lowering our revenue guidance for the year. As a high-growth business, it is difficult to forecast new distribution wins and timing of retail rollouts. I own that. For fiscal 2021, we now expect revenue between $210 and $215 million, which implies year-over-year growth of 41 to 45%, and I am very proud of that. This is still only the beginning. We believe Tattooed Chef is positioned to be the leading plant-based food company for years to come. With full vertically integrated production, diversified product lines, and the ability to win in multiple areas of grocery stores, Tattooed Chef is positioned for long-term success. In May, we announced the acquisition of Foods of New Mexico to expand our production capacity and diversify our capabilities outside of frozen food. We are in the process of selling our new branded products to retailers, starting with frozen Mexican products in the first half of next year. The Carson facility is set to open at the end of the first quarter 2022, and we expect to start selling ambient products. On October 26th, we announced our agreement to acquire Belmont Confections, a private label co-manufacturer of nutrition bars and snacks, for approximately $18 million in cash and stock. We expect the transaction to close by the end of the year. Similar to Foods of New Mexico, this acquisition opens up more capacity and capabilities and will transform a co-packing business into a branded manufacturer with higher margins. The 47,000 square foot production facility in Youngstown, Ohio, contains equipment to produce a variety of bars and snacks. We're really excited to enter the $10 billion global plant-based bar category with Tattooed Chef branded items. This also aligns with our growth strategy to develop more ambient and refrigerated products, unlocking more shelf space and expand our channel penetration beyond retail and club, allowing consumers to enjoy Tattooed Chef products at home and on the go. Between these two acquisitions, we believe they can contribute up to an additional $300 million in annual revenue in the next 2 to 3 years. The focus going forward will be to continue growing the Tattooed Chef branded plant-based product portfolio. We look for similar acquisitions that we are able to add assets and manufacturing in order to develop new products in other categories and create shareholder value. We continue to broaden our growth as measured by spins. In the last 52 weeks ended October 3rd, 2021, our TDPs have increased by over 315%, and our measured consumption has increased.
We're economy.
239%.
You're gonna wait a few weeks before increasing your shares is a smart move. You know, there's gonna be a lot of volatility trading.
Additionally,
wait until it settles down and calms down in price before buying in. I like that way.
Highlighting the continued traction we are having in measured channels. In the third quarter, we saw our consumption sales increase by 49% versus Q2. Additionally, when comparing Our total U.S. MULO consumption sales for the latest 12-week ended October 3rd, 2021 versus our health and wellness branded peers as defined by SPINS, Tattooed Chef is now the fourth largest brand in total in the categories in which we compete. More specifically, in our core category, frozen vegetable entrees, Tattooed Chef is the number 2 ranked health and wellness brand as measured by SPINS. We consider this a tremendous testament to the strength of the brand and our team's ability to execute. Our innovation is working. In the last 52 weeks ended October 3rd, 2021, we had 4 of the top 10 best performing single-serve new innovation SKUs in the frozen vegetable entree category in total dollars, and 5 of the top 10 performing SKUs when comparing velocity. This success is also now translating to the pizza category. In the latest 52 weeks, Tattooed Chef has the 3rd best performing new pizza SKU launch in the health and wellness category as measured by SPINS, and it is the number 1 SKU in terms of velocity. In Club, we had 3 limited time offers, including our Huevos Rancheros Breakfast Bowl, Cheeseburger Bowl, and Pad Thai Fried Rice. According to SPINS, in the Club channel for the latest 12 weeks ended October 3rd, 2021, Tattooed Chef is up over 64%. For the 52 weeks ended October 3rd, 2021, Tattooed Chef was up nearly 26% and remains one of the fastest growing brands in the frozen category. In the mass channel, latest 12 weeks ended October 3rd, 2021, according to MULO, we have grown 2,163%, and we continue to see tremendous momentum. In October, at Target, we also increased the number of categories offering Tattooed Chef, adding assortments in the pizza, breakfast, vegetable categories, increasing our SKU count to 25 total. In the grocery channel, we continue to win distribution with both national and regional retailers in the U.S. because of our innovative product portfolio and case studies in existing retailers. As a reminder, we launched our food channel program at the start of 2021, and we are very encouraged by the results. In our core category frozen entrees for the latest 12 weeks ended October 3rd, 2021, we are now a top 10 selling health and wellness brand and by far the fastest growing in the category. In the 3rd quarter, we began distribution at Kroger, Sprouts Farmers Market, multiple Albertsons divisions, including Southwest, SoCal, NorCal, Intermountain, Seattle. Also, H-E-B and Price Chopper. As we previously announced, in the 4th quarter, we launched 6 SKUs in Publix, as well as 1 new distribution in Giant, Weis, and Hy-Vee. We also expanded our total average SKU count per store from 5.8 to the end of Q2 to 6.5 today. Our internal goal is to get to 30 frozen SKUs per store across retail, and we are well on our way to achieve this with many retailers. We also believe we have even more upside when we launch into ambient products. We have multiple avenues of growth, with expanding product offerings in existing retailers, gaining more distribution with new retailers, including grocery and convenience stores, developing our food service business, as well as licensing and international opportunities. From an operational standpoint, we're on track to increase our production capacity nearly 4-fold in 2021. With the addition of Belmont, we will have over 315,000 square feet of manufacturing space to make everything from pizza to bowls to bars, snacks, and more to control our own destiny. Tattooed Chef has the ability to be a generational brand. It resonates with Gen Z and millennial consumers who are looking to connect with brands and food. What we are most focused on now is building brand awareness to drive more sales because we know our products are far more superior to others in the market today. And now I'd like to turn over the call to Sarah to discuss our innovation and our marketing efforts.
Thank you, and good afternoon, everyone. We have a lot of exciting plans in the works at Tattooed Chef. While we're not ready to divulge everything just yet, I can tell you we have a strong pipeline of over 250 ideas that we believe are unique and will resonate with consumers. First, we have decided that new innovation out of the Foods of New Mexico facilities for the Tattooed Chef brand will be 100% vegan. We think there is a significant gap within the Hispanic Southwest food category for vegan items and believe the Tattooed Chef brand has the ability to lead in that category given the success we've had to date with other offerings like our plant-based burrito bowl. We are in talks with retailers and expect to launch these new products in the first half of next year. Second, a recent announcement to acquire Belmont Confections will allow us to produce virtually any bar, whether that be refrigerated, shelf-stable, or confection candy. This also opens up additional areas of the store outside of frozen for the Tattooed Chef brand. While the transaction has not closed yet, we have already begun testing for the new line of unique plant-based bars and will be on shelf at some point next year. Our products continue to perform well as demonstrated by Tattooed Chef now being a top 10 brand across club, grocery, and mass in the categories in which we compete. In Q3, we launched 6 new SKUs, including our plant-based maple sausage and sweet potato bowl and cauliflower meatless lovers pizza bowl. One of the greatest competitive advantages we have is our vertical integration and agile manufacturing capabilities to be able to pivot and capture the latest trends. Turning to our marketing efforts, we have continued to aggressively spend behind the Tattooed Chef brand to build greater brand awareness. We've created an ambassador program and started testing more marketing on social, Facebook, Instagram, and Pinterest, as well as paid YouTube and Spotify ads to see where we get the best engagement. The results have been very positive, outperforming industry benchmarks by 2 times in terms of consumer engagement for paid social. Our goal is to meet the consumer where they already are, so they're more inclined to share and continue to build the community. We are approaching things differently than traditional food brands, and it's on purpose. The momentum we are seeing in our business and our winning brand positioning sets us up to take market share and bring new consumers into the categories we serve. Now I'll turn it over to Stephanie to walk through our financials.
Thank you, Sarah, and good afternoon, everyone. To begin, there were some items that came into question that resulted in what has been determined to be immaterial revisions of prior quarters. While this was a technical accounting matter that primarily affected expenses classified between cost of goods sold and operating expenses, full detail will be available in our 10-Q filing. In the third quarter of 2021, revenue increased 43.5% to $58.8 million compared to $41 million for the prior year period. As Sam mentioned, the revenue increase was driven by a $12.7 million or 56% increase in revenue of Tattooed Chef branded products. This now accounts for 60% of our total revenue, a slight decrease from last quarter due to the recent Foods of New Mexico acquisition, which is included in private label revenue. Gross profit in the third quarter was $5.9 million, or 10.1% of revenue, compared to $4.2 million, or 10.3% for the prior year period. The slight decrease in gross margin was primarily due to the increases in raw materials, packaging, and freight and container costs due to inflation, as well as the 2 facilities in New Mexico, which were newly acquired in May 2021, partially offset by the achievement of economies of scale from the increase of Tattooed Chef sales volume and improved production capacity. Foods of New Mexico currently only manufactures private label products which have a lower margin when compared to our Tattooed Chef branded products. The facility is expected to be fully operational and manufacturing both private label and Tattooed Chef branded products during 2022. The Karsten facility is not currently in operation and is expected to become active during the first quarter of 2022. We anticipate quarterly gross margin to expand in the fourth quarter of 2021 and throughout 2022 as we increase our branded volume and our production capacity. Operating expenses increased to $13.6 million in the third quarter of 2021 compared to $7.6 million in the prior year period. The increase in operating expenses was primarily due to an increase of $3.4 million in marketing expenses, $0.4 million in sales commission expense, $0.5 million in resolution of a dispute and related fees, $0.8 million in stock compensation expense, and $1.5 million in operating expenses for Foods of New Mexico, which was newly acquired in May 2021, partially offset by a decrease of $2.2 million in professional expenses. We expect operating expenses to decrease as a percentage of revenue over time as we benefit from economies of scale. We are also heavily investing in the Tattooed Chef brand to increase distribution, raise brand awareness, and drive sales in the new stores that are launching products. The costs that we are investing in today should produce realized benefits in the future. Net loss was $8.2 million in the 3 months ended September 30, 2021, compared to net loss of $3.1 million in the prior year period. Adjusted EBITDA was negative $5 million in the third quarter of 2021 compared to adjusted EBITDA of positive $1.6 million in the prior year period. The decline was primarily due to public accounting costs that were not present in the third quarter of 2020 and the operating expenses that were just mentioned. As of September 30, 2021, we had cash and cash equivalents of $129.5 million. Now turning to our outlook. The company is committed to an aggressive plan of growing the Tattooed Chef brand. As Sam stated earlier, we now expect total revenue in the range of $210 million to $215 million, an increase of 41 to 45% compared to 2020. We are firing on all cylinders, winning new distribution, diversifying our sales channel, innovating, gaining market share, and have some of the highest velocities in frozen food. However, it is difficult to forecast new distribution wins and timing of retail rollouts, which has led us to lowering our forecast for the year. We now expect gross margin to be between 12 to 14%. We have been focused on our supply chain and avoiding distribution delays. Similar to peers, we are also experiencing some inflation in freight and container costs. We now expect adjusted EBITDA to be a loss of $18 to $20 million. We will continue with our aggressive plan to grow the brand through extensive marketing and promotional spend that has already produced significant growth. Lastly, we expect capital expenditures in the range of $15 to $20 million for full year 2021, which includes both our recent acquisition of Foods of New Mexico and plans for Belmont Confections. In closing, we believe the Tattooed Chef brand has great potential, and we have a significant runway for growth in the large and growing plant-based food category. With increased distribution, robust innovation pipeline, recent acquisitions, and a strong balance sheet, we are well positioned heading into 2022. With that, we are now available to take your questions. Operator?
Thank you. We will now begin the question and answer session. To ask a question, you may press star then one on your touch-tone phone. If you're using a speakerphone, please pick up your handset before pressing the keys. To withdraw your question, please press star then two. At this time, we will pause momentarily to assemble our roster. Our first question comes from George Kelly with Roth Capital. Please go ahead.
Hey, everybody. Thanks for taking my questions. So maybe to start, hoping you could give any more detail just about guidance. So I know in prior quarters you've sort of broken down your full year expectation by the core business and then layered on Foods in New Mexico. So curious if you could do that again. And are there any channels, I don't know if it's club or grocery, like any more specificity you can give just on the gap in guidance?
So, George, thanks for the question. When we start to talk about the implied guidance of 48 to 53 million, which I know you already did the math on for Q4, to finish out the year in that 210 to 215 range, it is a lack of promotions and things like that in the club channel that we would normally see at this point in time. People really focus on indulgent eating, and with the holidays last year being more stay at home and not normal, it's really hard for us to predict the consumer behavior that's going to happen in the healthy eating space. And so we looked at everything, and this is where we feel very comfortable guiding for this year. When we start to talk about gross margin and those types of things, inflation is a factor. It's always been a factor. And remember that our freight costs are included in cost of goods sold for both inbound raw materials and outbound freight costs. And that means that that inflation does directly affect gross margin for Tattooed Chef.
Okay. And then next question for me, and I'm not looking for specific guidance, but just hoping you can sort of help directionally with next year. And what I'm most curious about is your approach to margins next year. I know gross margin, there's all these factors that some of which are out of your control around inflation and all that. But I kept hearing in your prepared remarks that advertising, you've been pleased with the returns there. And so I'm just trying to understand, like, how aggressive should I be, or should folks listening, like, is EBITDA, will you kind of continuing investing a lot incrementally next year in advertising, and should we kind of expect EBITDA break even or even profitability to be deferred maybe into 2023?
George, we are aggressively growing Tattooed Chef, and we're going to continue to spend aggressively in marketing for 2022 and in promotions. You will start to see some profitability in 2023, and we really think that the back half of 2023 is when we foresee some of that turning around without getting too specific.
Okay. And then maybe last question for me, just to revisit the first topic that you were going through about club. So are there any, I understand that this is a difficult year-over-year comp and with holiday, how people are spending their holidays and the like, but any kind of big promotions that ran last year that are especially challenging, or like how much of a decline are you expecting in the club channel in the fourth quarter?
So remember that we had talked previously in Q1 and Q2, we ran very large promotions within the club channels. Q3, those promotions back off in the form of limited time offers. And then in Q4, honestly, there's no giant promotion. There's a little bit of limited time offer lift that'll still occur, but even Q3 is pretty much the growth that we've seen in Tattooed Chef at mass and grocery, and not as reliant on club as Q1 and Q2 were this year.
Okay. I think that's all I had. I appreciate the time.
Thank you,
Thank you so much, George.
This concludes our question and answer session. I would like to turn the conference back over to Sam Galletti for any closing remarks.
Thank you for joining us today. We believe Tattooed Chef is positioned to win in plant-based foods, and our strong growth demonstrates that our products are resonating with consumers. I look forward to speaking to you again at upcoming investor events and our fourth quarter and full year 2021 earnings call next year. Have a great day.
The conference is now concluded. Thank you for attending today's presentation. You may now disconnect.
Oh, wow. Economy, thank you very much for still joining in. Thank you very much for all your time, and I hope to see you soon in the next video as well, Economy. Glad to have you in the Discord or whatever it may be. Thank you very much, and love to see you next time. Alright, ending off.